Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me. As at this Monday afternoon market recap, we do have about 30 minutes left in today's session. However, as you are very well aware, most likely, it has been a tremendously bearish session worth of trade. The Dow Jones Industrial Average, as I sit down and bring you this recording, is down 444 points. What makes this even more important, really, right now at the current juncture, is that we are cracking below this little swing low over here. And this is significant because it has been that third consecutive high low since we have been basing off from this 23,750 area. Now, again, if we align these lows off from the bottom, you can see that we have not only just taken out this swing low, but we have also broken below this rising trend line. This has got bearishness written all over it. Right now, the market is bearish, or at least short term it's bearish. And it is a period in time where you need to be defensive. Now, over the weekend in that pro analysis class that we recorded Saturday, we went through two options as to how this market is going to play out. And really it was quite a sharp directional turn away from the past narrative, which has been really trading long off from the support areas. We spoke about how the market itself was looking rather fragile, and what would happen if this trend line broke and if this support area broke. Now, both of those scenarios have just occurred as at Monday, which, as for the rest of the week, sets us up in a rather difficult type of position. Not difficult because we don't know what's going on or that we haven't seen this happening, just because the market itself probably has further to fall. The support area that you should be paying attention to, first of all, is down here at 23,750. This is the back test all the way back to the first support area in the month of February. You can see that we retested it in the month of March, in April, also in May. And since May, since the second high low has been established, we have been pushing off from this level. This is now almost a guaranteed support area. So the Dow Jones Industrial Average is trading at 24,136, give or take. We still have another 300 odd points to fall until we come back down to the support area. The good news is, when and if we do this, we can set up a bunch of bidirectional trades off from this area of support like we've done in the past. And we'll give the benefit of the doubt really with either side who wants to take control of this market. But right now, control of the market, it is with the bears. And it does look as though this week is going to be rather ominous. All bets are off if we start cracking below these two lower wicks. And I just wanted to say on that note, as I look at these markets, it is exceptionally bearish across the board, especially when we start breaking down a bunch of individual trades. I encourage people to have a look into that pro analysis class and have a look into the most recent pro recording on Saturday. In fact, what I did, I spoke about the market analysis, just simply the analysis on the industrial average, the S&P and the NASDAQ, the transportational and the Russell markets for I think just over 1 hour. It was that severe and that important to me. So I think it is very timely for a lot of people. If you find yourselves a little bit confused, who knows, maybe somewhat a little bit worried about the current movements of the market, it is a fantastic idea to go into that resource and learn for yourself, or at least understand just what is happening or what appears to be happening below the surface, because it's very timely and it's very important right now. Well, now what makes this even more interesting is that over the weekend we were talking about, well, going back to Wednesday's session last week, this was looking like an exhaustion gap. And what we didn't have as at the close on Friday was that of a gap in the opposite direction. It's interesting how these things set up, because when this eventuated, or at least when I spoke about it over the weekend, we were going through a couple of hypothetical sort of situations. And one of those situations, well, imagine if there was a gap to the downside. What would that leave us with? And essentially what that would leave us with was some form of a blended island reversal. Now, it's not a textbook island reversal because we have essentially closed the gap between that of Tuesday and Wednesday last week, but we certainly, absolutely, definitively have an exhaustion move to the upside, of what appears to be an exhaustion move. And we've also now got a gap in the opposite direction. This is what we call that of a reversal gap. So bearish signals galore at the moment. We've got an engulfing candlestick. This was on Thursday. Sort of a mediocre day there on Friday. We didn't really move all that far, but it is another dark candlestick. It's going to be very interesting to see what the closing print of the volume is as at Monday, but we certainly do have the construction of another long day Morobozu to the downside. Now, the good news is that with the Nasdaq, we are still holding up above the long-term simple moving averages. So when you see price action enter into these types of retracements or pullbacks, especially when it's a market and you see the slope of the 100 and 200 as aggressively bullish as what it is, it almost guarantees that we are going to see again another back test of this upper resistance area. It's going to be very important what happens at this upper area, but it is also going to be equally as important whether or not the Dow and the S&P 500 hold at their macro support areas. In the past, we have held at support, hence why we've had a rather bullish tone on the market for the past number of months. That now, if you can tell by the dialogue as at this Monday afternoon market discussion, is certainly being questioned, and we began really to question it as at Saturday most recently. So it's interesting, again, the formations of these markets. We don't have the markets in agreement. We are not, as they say in Dow theory, confirming one another. The reason for that is because as the Nasdaq pushed on up to its most recent all-time high, the Dow Jones Industrial Average and the S&P 500 really began to diverge quite considerably. And we were essentially saying that, look, one of these two markets, whether or not it's the Nasdaq and the Dow or the S&P and the Nasdaq, are telling us fibs. What essentially we did was we very easily overlapped both the industrial average and the Nasdaq just to really show, at least illustrate, the divergence taking place. And as you can see, it looks as though the Nasdaq is going to be playing catch up to the recent movements in the industrial average and also the S&P 500. But talking about the structure of the market, pay attention to the S&P 500. First of all, we are down 52 points with about 30 minutes left in today's session. There is a gap to the downside, a pretty strong window as well. But we are retesting the 100 from the top, and also we haven't actually broken below the swing low. So even on the downside move as well, we don't have true confirmation where we haven't actually confirmed that of the S&P, confirming that of the Dow break of its relevant or its most recent highest swing low. Also, we are still above this of the bullish trend line. So you have to give or take a couple of points. Really, if you see another consecutive sell-off like we saw as at Monday, that will all but more or less guarantee a move back to 2,600 on the S&P 500. But above all else right now, what you can really see, if you just use your eyes, is pay attention to the slope of the rising 100 and 200 simple moving averages. I need to zoom out just to put this in perspective. Really, for quite some time, this market has been aggressively bullish. You can see that slope price action above both the 100 and the 200, angling very, very nicely. But if you start paying attention to what has been more or less the consolidation, or at least the sideways move of the market for the majority of 2018, you can see price action once again is coming back down to retest that sideways moving 100 simple moving average at the moment. It's no longer a strong aggressive slope to the upside. In fact, it's moving sideways, which is a very important distinguishment that needs to be made. Also, what is happening is that the 200 and the 100 are coming very close together. So it's going to be interesting to see whether or not support, or at least price action, holds above the 100 and also the 200, and to see whether or not we actually see some form of a major simple moving average cross moving forward. The Dow Jones Industrial Average is now breaking below the 100 and the 200. And in fact, when you look at the angle, okay, it's not an angle of ascent anymore. It's actually turning to the downside. It's actually descending, or at least the 100 simple moving averages as well. So the markets are looking shaky, and it's best when the markets are shaky, or at least when volatility picks up and when we don't have definitive movements, i.e. we don't have definitive trend reversals because we still aren't breaking this macro support area, that largely you remain defensive and you don't go chasing a bunch of trades either direction at the moment. It's best, again, to sit on your hands and allow the market to move into a macro pivot, so then you can begin setting up the structures of bidirectional trade setups. Very important lesson for a lot of people who are listening to this video recording. Now, having said that, let me just also show you a couple of things. If I go to the yearly candlestick of the industrial average, I know my chart is horrendously ugly at the moment. You can see that we are down 582 points, okay, on the yearly chart for the Dow Jones Industrial Average. The S&P 500 is slightly up. It's up 29 points. We do have that of a spinning top candlestick. This is really at or very close to the end of the 6th calendar month of 2018. And these are reversal signals. Also, what we spoke about over the weekend, if I can bring up the right chart here, was on the Nasdaq, we had a doji candlestick all the way up at a resistance area, very close to or just after a recent whipsaw or false push to the upside with that upper wick. So this was very telling, and we sort of drilled into this for quite some time. Generally, doji candlesticks at all-time highs when a market is looking exhausted, and certainly when we don't have Dow theory confirmation between other markets, is generally that of a reversal signal. And as you can see, we are pushing away from that doji, and we are selling off quite definitively. On the weekly chart of the Dow, we were still holding above that bullish trend line. And on the S&P 500, we had more or less a spinning top after a similar type of doji candlestick, not showing up at the all-time high. Again, this was considerably below that of the high towards the end of January there in 2018. Now, if I bring back up my annotations onto the screen, we started to recognize a couple of interesting patterns in a number of different stocks. First of all, a very rare pattern, and I need to give you an update on this. This is Netflix, and what we spoke about was how this looked like a diamond sort of reversal pattern. And again, very similar to the discussion that we had on the NASDAQ. First of all, it was very clear that a lot of these individual companies were showing signs of incredible weakness. What we didn't have was a gap to the downside. This is essentially an island reversal candlestick mixed with a diamond pattern on Netflix. Exceptionally bearish. I am so happy that we canned out of the trade at 399, the psychological round number. This was after the breakout at 342 and also the continuational entry at 373. This trade has run its course, but this right here has got bearish reversal written all over it. So again, you should not be essentially looking to trade these stocks short. Okay, the structure isn't there, so to speak, and you are still technically trading against the rising trend. You can see that we're just selling off back into the exponential moving averages. However, what this generally does is that it sets up into a trend reversal. And what I mean by that is that we'll find a base, we'll rally, and we'll probably set up some form of a leaning double top, something like that over the next couple of weeks moving forward. Something to pay attention to, but a very, very rare pattern in the diamond reversal. And I wouldn't say more of a rarer position when it comes to the island reversal gap, but you mix those two together, things aren't looking very good for Netflix right now. Tesla, this has been volatile as you can probably get, or very close to that. We haven't been in a trade really on Tesla recently, but this is certainly looking like a rounding top. We're only down $2.48, but what is most important is that if I can bring up the right chart, it still looks as though, and this is on the weekly chart, that we have a series of lower highs. These are two relative highs here, and even more so relative to the most recent swing high, but this is certainly looking to roll as well on Tesla. We've got Apple. If I can bring this up to everyone follows Apple, we're starting to crack below the breakout levels, which is very, very important to note, okay? Disconnect yourself emotionally from trades. All stocks, all trades that you enter into, whether it's just stock or option transactions, we are now reversing below the support area. Again, the theme of the analysis over the weekend was defense. How to play defense, put in stops, do things like that. Don't think overly aggressively at the moment. Yes, we can set up continuational entries if the market chooses to do so. However, the market is looking bearish. So again, it's defensive plays at the moment. Amazon, again, pulling back. Said to place the stop below these two candlesticks here. This was after the breakout above 1640. We had the outside day engulfing candlestick. This was on Thursday last week. This was after, of course, that shooting star, which was working in conjunction with this gap, the exhaustion gap, which we saw on the NASDAQ on Wednesday. So you can see very quickly how the picture can change. All right, so you can see if we go down this list, Boeing Airlines continuing to the downside, Baidu coming down to retest this rising trend level. Very important. We're going to see what happens with this one. Still not looking to play it. Caterpillar appearing to break down below the support area at about 138. Massive move here on Caterpillar. Still not looking to go short. None of these trades am I personally looking to go short on at the moment, even though you can make a very bearish case for it. Okay, the market goes through a process, and it's going to take a while until the true support areas are established, upon which we'll bracket the trades for that major break if it chooses to do so at a later date. This is just the first sort of ebb and flow pullback of the market itself. COP, another sort of one black crow candlestick today. This was after a bunch of bearish candlesticks and just gaps, little spinning top candlesticks that we've seen for about a week and a half now. Not a whole lot I can update you on, but at the same time looking relatively shaky. This is interesting. 3-day reversal pattern right here, an evening star, sort of continuation pattern. I did say reversal continuation. The reason I'm saying that is because we're making a series of lower highs at the moment. So this is suggesting that this stock is going to come down to $120 per share. We've got Google. This was another interesting stock. We were in this long from 1,050, 155, a continuation entry from 1151. We hit our target just shy of 1190, and we were out. Absolutely out. Over the weekend, we were saying stay away from this. This is going to be an absolute nightmare to trade. Google today down $44 at the moment. Just as easily as this is down $44 today, it could rally essentially tomorrow and be up another $54. This is going to be a tremendously volatile period for a number of stocks, including Google, and it's a good learning opportunity for people to recognize market environments when it's best to stay away. Okay, let the dust settle, so to speak, and let either the buyers or sellers essentially gain true control down at lower areas. At the moment, bears are in control, but we are relatively close to that macro support that we have been trying to essentially break below since that first waterfall sell-off in the month of February, all right, as we entered into February. We've got IBM cracking below support at 138. This is going to be very interesting as well, very close to that 138.11 trigger. And that right there essentially rounds us out through our list. Also, what I haven't mentioned is that of the US dollar at the moment. You can see it's still pulling back. However, this is really the segue that I wanted to lead into. There still hasn't been a major bid for gold. We've got 3 consecutive white candlesticks. We're sort of interacting with this second decelerating fan line. We're going to have to pay attention to this because if we do see the market pull on back down or at least further retrace, we should see a legitimate support show up on GLD. And that is also working in conjunction with what has been a pullback in the US dollar for the past number of sessions. It's still a little bit too early to say definitively what's going to happen, but if there is going to be a turning point on GLD, it should show up very close to, if not more or less, where we are currently trading at the moment. Always trade with stops. Place your stops below the lows of this swing over here. This is going back to Thursday last week. Also, more or less, the intraday session push today being Monday. But it's interesting. Pay attention to GLD. I do believe this is going to spring to life. And also on that note, what I didn't say about the US dollar, just to keep this as neutral as possible, is that, who knows, this might be a bull flag continuation, but at the same time, it doesn't really look like it. I will say that. It truly doesn't really look like it on the US dollar at the moment. So that's going to do us as we draw towards the end of trade on Monday. If you have any questions, please email me. However, I encourage you, have a look into that analysis class if you want. Really about an hour of analysis on the overall structure of the market and again, the changing picture as we enter into this week. It was a little bit of a warning there, but at the same time, we did go into a couple of other things and sort of larger fractals as well that has got me somewhat concerned at this particular point. All right. On that note, everyone, I'm going to say farewell to you. It's James signing off on behalf of Pivot Point Trading. Goodbye.